from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Twitter has a big week ahead, not just earnings, but the first hearing in Twitter v. Musk is now scheduled for Tuesday in a Delaware court. We will tell you what to expect. Plus, Amazon and Meta are getting creative to save cash with plans to cut back on office expansions in New York. We'll bring you the Bloomberg exclusive. And we're chatting with Bitcoin bull Anthony Pompliano about the crypto downturn and his new startup designed to train workers for a new generation of crypto companies. All of that in a moment, but first I want to get a look at the markets. Tech leading the way as stocks snap back to close in the green, but it was another down week overall ahead of 2 key weeks of key earnings reports. Our Ed Ludlow has the latest, and it could be a spicy couple of weeks too, Ed.
Yeah, we're really bracing, right, for this earnings period where we think the world's biggest tech companies are going to give us this lens into the state of the global economy, the consumer. But it was interesting Friday because there is a lot of the green on the screen there, right? You see the S&P 500, the NASDAQ 100, both up almost 2 percentage points. Outperformance in the semiconductor space. You see the Philadelphia Semiconductor Index, or SOX, up 2.5%, reporting by Bloomberg, according to sources, SK Hynix, a big maker of memory chips, is actually pulling back on its capex or spending plans because of weakening demand. But that actually boosted the sector on Friday, and yields softer as well. You see the US 10-year softer by around 4 basis points. It's interesting. We're kind of micro-focused on the Fed, right? But we're also looking at other data. And if you come with me into my Bloomberg terminal, we got the Michigan consumer sentiment data for the month of June, right? It was a reading that ticked up in the most recent data dump as inflation is still hot. But what we're seeing is signs, especially in retail data, which we got Friday as well, that the economy is holding up, spending is plateauing, but we're starting to rethink how worried we are about the Fed and how aggressively they will raise rates, right? Bets, if you look at the bets on the increments which the Federal Reserve will raise interest rates, we come down from basically thinking we're going to get 100 basis points at the next meeting down nearer to 75 basis points, 50 basis points. And you throw all in the mix, that eco stuff, we're here for the news. Let's go. Full send on the news. Amazon up 2.6%, really strong Prime Day. Very interesting data coming out. We've been talking about Netflix up 8%. Really fascinating next week when we get their earnings of how they're doing, because of course they kind of revised their guidance for the year in light of what happened in the first half of this year. Micron higher, as I said, a lot of movement in the semiconductor space. And then finally, we went over this in Thursday's show, but Pinterest up 16% Friday. The reporting, of course, that activist investor Elliott has taken a 9% stake in the company. Talks ongoing between Elliott and Pinterest's management. We don't know what about, but clearly investors see it as a positive sign.
Ooh, already getting excited about next week, Ed.
I'm always excited, yeah.
For the preview. Okay, looking ahead. A judge set a hearing for Tuesday, granting Twitter's request to fast-track its case against Elon Musk. Twitter lawyers claim Musk wrongfully canceled his $44 billion buyout and say they only need 4 days to prove it in Delaware court. And the court of public opinion. Joining me now, Jasmine Emberg, principal analyst at Insider Intelligence. So look, Jasmine, Twitter's been in a state of limbo now for months. How significant is it that they got the judge to hear this case right away?
It's significant, but it is, of course, only the first hearing in what I expect will be a pretty long and drawn-out court battle. Either way, though, there really is no great outcome for Twitter at this point. It is either going to end up in the hands of someone who is unhappy and uninterested in the product, or then it's going to go back to the same position it was before this whole ordeal began, which, of course, is a position of underperformance relative to its peers, or perhaps even weaker than it was last April.
Right. Twitter earnings are coming out towards the end of next week. What are you expecting there in the middle of all of this?
Yeah, I'm expecting that we will see that Twitter had a pretty turbulent quarter, and I'm not expecting the turmoil to end right now. Musk is the noisiest challenge that Twitter is dealing with at the moment. But of course, it's also susceptible to many of the challenges within the digital advertising landscape, which include these macroeconomic headwinds, include iOS changes, include shifting consumer behaviors, which are impacting, social media platforms across the board. Twitter is a relatively small player in the social media advertising landscape. At Insider Intelligence, we expect Twitter to rake in just 1% of worldwide digital ad revenues this year. Compare that with Facebook, which we're expecting will bring in around 13%, Instagram 9%, and TikTok is even double where Twitter is expected to be by the end of this year at around 2%. So especially for a small tier player, this was probably a very tough quarter.
Meantime, you've got Twitter still making product announcements in the middle of all this, trying to portray this sort of business as usual environment when all of this is completely unprecedented. I'm curious how you think a courtroom battle, you've also got the US midterm elections coming up. How do you think this is all going to impact engagement?
Yeah, I mean, Twitter has been rolling out new ad and commerce related tools in order to, prove to advertisers that it's business as normal, as you said, but it certainly isn't. Twitter is a platform that thrives on news and controversy. So there is a possibility that people logged in more, signed up for the platform to watch the drama unfold. But we also heard that some people may have left the platform because they didn't want it to be controlled by Musk. I am still expecting to see perhaps some growth in monetizable daily active users. At Insider Intelligence, though, for the full year 2022, we're actually expecting just very minimal growth worldwide and a decline in Twitter users. Now, we forecast monthly users, so they're not comparable to Twitter's MDAUs.
So look, if you're a Twitter investor right now, what do you do?
That's a great question. I think we'll have to wait and see the state of the financials next week. We'll get a better picture of what Twitter is really dealing with at the moment.
All right, Jasmine Enberg, Insider Intelligence Principal Analyst. Always good to have your perspective here on the show. Jasmine, thank you. So, what are Musk's chances of getting out of this deal, and how good is Twitter's case? For more on that, I want to bring in Lawrence Hammermash, Executive Director of the University of Pennsylvania, Kerry Law School. Larry, I'm so excited to have you. So curious to hear what you think, whose argument is better here. Looking at what you've seen so far, a very raucous complaint from Twitter, as well as what we've heard from Elon Musk to this point. Of course, he's been very prolific on Twitter itself. Who's got a better case?
Based on what I've seen so far, I'll side with Twitter, but that it's early in the day. I've seen from Musk's lawyers their principal contentions about why Musk is entitled to walk away. I've now read Twitter's complaint, and it's pretty clear that there's more to the story once Twitter tells it. That suggests to me that Musk's arguments are going to be tough. I mean, I can go into detail, but that's the overall view I've got.
How significant is the judge fast-tracking this suit?
I wouldn't. Well, first of all, it's absolutely standard when someone asks for a trial in a couple months for the judge to hear that question of scheduling pretty much right away. I mean, sometimes the same day. So Tuesday is kind of leisurely for something like this. The real question is what's going to happen on Tuesday, and is the judge going to schedule a trial in September, as Twitter has asked? Or is Musk going to come in with guns blazing with a filing that says, you shouldn't try this case with any kind of speed or unusual speed. You're never going to make me have to go through with a deal, so there's no rush. We haven't seen Musk's filing in opposition to Twitter's request for speed, but it'll be in, I would guess, by Monday, and we'll know more then. I still would think the judge would set the case down for trial sometime in the fall, maybe even maybe even late summer.
Right. When does Musk not come in guns blazing?
Well, he's got a big arsenal, I'll tell you that.
Well, so are you saying there that you think this could be wrapped up in the fall? I mean, we just heard Jasmine Enberg predict this is going to be a long and drawn out court battle, but maybe it won't be as long as we think?
Well, it'll be drawn out and it's going to seem long, but it's possible that it could be over by the fall, late fall, certainly. That's not an unusual kind of pace for the Delaware Court of Chancery in handling disputes involving busted deals.
So how likely is it that a court will force Elon Musk to do this deal? I know it is fairly unprecedented, but there is some precedent.
There certainly is some precedent. And in fact, the chancellor who's going to be hearing the case did it herself within the last couple of years for a much smaller and less notorious company. But it's a remedy that has been used, forcing the buyer to go forward. But, and I can also say that the merger agreement between Musk and Twitter is pretty strong in suggesting that that's what the court would need to do. But it's a judge, it's a chancellor. I think they value their flexibility and discretion in deciding what remedy is appropriate. And I could see the chancellor saying, forcing Musk to go through with this deal is not necessarily a good idea for the world. And people will be better off if I find some other way to enforce or apply sanctions for non-compliance with the agreement, if that's what she finds.
How could the court force Musk to buy Twitter? Do you see a daily fine, for example? Do you see going after his assets, going after his Tesla shares?
Yeah, I mean, those would be the natural go-tos. People have asked me in the course of the week, well, what about imprisonment? And I kind of don't think it's in the cards, but daily fines, I suppose you could call it the usual stuff if someone is in contempt. We're, of course, a long way away from that. There's got to be a judgment, and Musk would have to find an appropriate response. And if a court orders you to go forward with a deal, I could see even Elon Musk settling it.
And if he is forced to buy it, could he then turn right around and sell it? What are the legal issues there?
I think once he's a buyer and finishes the acquisition, it's his company. I won't say to do with what he wishes, but whatever governance powers he's got over the company, he can use to seek new investors, sell off a significant stake, or just continue to run it as a buyer.
Interesting. Now, I want to talk about who wins in any of these scenarios. We were speaking with Jason Goldman, one of the early members of the Twitter founding team, who said nobody wins except the lawyers. Take a listen to what he has to say.
Definitely the lawyers win. The lawyers are excited when they describe a case as being unprecedented and complicated. That's definitely code for there's going to be unprecedented legal fees. So they're set. Everyone else is a loser in this for sure.
So look, Larry, no matter the outcome, is this going to be any good for Twitter or Elon Musk in the end?
Well, Jasmine Edberg said something before that I thought was right on the money. No matter what happens, the longer this drags out, the worse it is for Twitter. Elon Musk is sitting on the sidelines right now looking at Twitter, and he doesn't have to do anything at the moment except litigate. And certainly he's got the resources to pay the lawyers to do that. Twitter's the party here that's got to deal with running a business while all these fireworks are going off all around. And as I've told people from time to time this week, that's not an enviable negotiating position. So, there is a victory scenario, I suppose, for Twitter, but there are a lot of things can go wrong for everybody, for sure.
How much will Musk's own record be used against him? He's got a history with the SEC. He didn't disclose his initial Twitter shares the way he should have. He's had problems with other regulatory agencies over the course of just the last few months. Will that come into play?
I think at best, atmospherically, the court in a case like this is going to focus like a laser on the terms of the merger agreement. If this case is going to get decided after a trial of 4 days or 6 days or whatever, it's still going to have to be pretty focused. And I would think you're not going to hear a whole lot about these peripheral things, what Musk has done. It's not as if the chancellor is unaware of some of the color here, but I wouldn't expect the parties to focus on it.
All right. Larry Hammermash, University of Pennsylvania Kerry Law School Executive Director. Really appreciate your thoughts and insights here today. We'll be watching. Nice to talk to you too. All right, coming up, TikTok is beefing up its global security team as the app faces scrutiny over user data. And who can see it? That is next. This is Bloomberg. TikTok just named a new head of security as the app deals with increasing scrutiny from U.S. policymakers over concerns that user data could wind up in the hands of the Chinese government. Bloomberg's Alex Barinka is covering this story. So, Alex, who did they tap to run security? And of course, we're talking about the parent company, ByteDance.
Of course. And they've tapped somebody from internal called Kim Albarella. She will run global security for ByteDance and is replacing the chap, Ronald Courtier, who was there before. And I want to point out something really interesting here, because we're in this moment for TikTok where they are sparring with the U.S. government. A lot of focus is on what they are doing security-wise. And in making this move and this change this morning to bring Kim in as the interim, TikTok CEO and ByteDance's VP of Tech said that this is part of their evolving approach to minimize concerns about security in the U.S. So what I'm reading between the lines here, Emily, and what I'm hearing from a source who is close to the decision-making behind this move is that Cloutier was a really great keep the bad guys out guy. Now they are kind of evolving their approach to think about how to best set up a data management department and security department that allays some of these concerns that we've seen coming out of Congress, coming out of the FCC about what TikTok is doing with U.S. users' data, and if any of that data gets into nefarious hands through its parent company, ByteDance.
We do have a statement from the CEO, Shou Chu. Part of our evolving approach has been to minimize concerns about the security of user data in the U.S., including the creation of a new department to manage user data, U.S. user data for TikTok. Can you remind us what the company has said about how they handle user data, who can see it, and whether the Chinese government can see it or not?
Yeah, and they've said a lot, Emily, just in the past couple of weeks. Basically, in a letter to U.S. senators, the company said that they're working on cordoning off U.S. users' data and working with CFIUS, a national security arm of the U.S. government, to decide which protected data, as deemed by the U.S. government, should actually stay in U.S. servers. Those servers will be run, of course, by Oracle. So they have said, we're trying to keep stuff here, but what has raised concern is a couple of weeks ago, they did admit that some U.S. users' data does get into the hands of Chinese employees who are doing work. They say that there are rigorous security kind of constraints in who can see that. But so far, what that information is, it is things like public videos, public comments, and things needed to run the app writ large. So that's kind of the split that they're talking about right now. But it does seem like, Emily, this will be an evolving landscape, an evolving infrastructure for them going forward with this kind of shakeup in the security arm of their operations.
So what's next? What do we expect?
Yeah, there should be some meetings with Brendan Carr's team, is something we learned about this week. Brendan Carr is an FCC member, a Republican member, who's been very loud, very vocal, saying that just this week that TikTok's a security threat to our military who's using it overseas. The company has said this week that they're meeting with that team. They will also continue this process working with CFIUS, that national security arm of the U.S. government, to try to wall off this information in a way that they feel comfortable with. I would guess what they're trying to do is head off any large buzz like we saw a couple of years ago with folks like President Trump at the time saying we need to get rid of TikTok because it is a national security threat. But I would expect that kind of volleying to continue between lawmakers, folks like the FCC, and TikTok.
All right. Bloomberg's Alex Barinka, thank you for breaking all that down. Coming up, New York's prospects as a tech hub just took a bit of a hit. We will explain next. This is Bloomberg. Now to an exclusive. Sources tell Bloomberg that Meta and Amazon are cutting back on plans to boost their office presence in order to cut costs. both companies are backing out of expansions in New York that could have brought hundreds of millions of dollars to the city's economy. Bloomberg's Natalie Wong broke this story. Natalie, what do we know?
Thanks for having me. So we reported today that Meta and Amazon have pulled back on their expansion plans for offices in New York City. Meta had planned to take over roughly 300,000 square feet of new offices in a building near Astor Place, and that would have been a big expansion. It's no longer doing that, according to our sources. Amazon was also in talks to expand in a JP Morgan sublease space, taking over roughly 400,000 square feet, and they're also cutting back on the amount of square footage they're looking to take. So it really shows a sort of caution on these tech firms' parts in terms of looking at how much office space they really need in this current market condition.
So how big a blow is this to New York's ambitions to become a bigger tech hub?
It's a pretty big blow just because New York has already been struggling with a major office glut, and it's just slowly started to come back in terms of office leasing in the past 2 years. The firms that were really driving this were the big tech firms that seem to have insatiable appetite for space, like Facebook, like Amazon. So the fact that even these firms are pressing pause on growth, that's likely going to trickle out across smaller tech firms, the crypto firms, and other financial industry firms as well.
Is this happening elsewhere across the country?
This is happening elsewhere across the country. We've reported that Amazon has cut back on other real estate needs in terms of planned warehouses for sites that they just built or just purchased several months ago. They've pressed pause on those sites. They've expanded too quickly. Construction is halting on other sites across the country. And office markets in many places like San Francisco, Seattle, Los Angeles have already been struggling to come back because tech firms especially have been slower to bring back their workers. So now you have a double whammy of companies see that remote work is here to stay and they have to juggle how much space they need versus how many workers are actually going to return. And then they also have to figure out, how much costs they have to cut in terms of this slowdown with their growth, with the economy, and fears about a potential recession.
All right, Natalie Wong, thank you for your reporting on this. We will keep following. Coming up, tech earnings around the corner. We're going to take a look at what to expect next week from companies like Netflix, Twitter, and more. All that coming up. Snap 2 and Tesla. This is Bloomberg. Welcome back to Bloomberg Technology. We've got some breaking news. Elon Musk has responded to Twitter's request to expedite the trial, which of course a judge today granted, setting a date to start for Tuesday. Musk now saying he wants that moved to February or later. Of course, Twitter wants the trial to start in September. Musk saying that Twitter dragged its feet on the deal and is now rushing this trial. For a little bit more of a breakdown, I want to bring back Ed Ledlow. Ed, not surprising that Elon Musk wouldn't want to rush to court on Tuesday.
Yeah, not surprising at all. I mean, in most of the lawyers that Bloomberg's spoken to felt that Twitter had a good case to hold Musk to account to the original terms of the deal, $54.20 a share. The hearing is set for next Tuesday, the initial hearing. The expectation is that this will be a protracted legal proceeding anyway. But as you say, Musk is accusing Twitter of having dragged its feet over the negotiation of the deal and now rushing to court. Remember, the sticking point for him is, and what he will argue, is that Twitter was not forthcoming in the timing, frequency, or what they shared on the issue of bots on the platform. And he's going to argue that that was equal to material adverse effect, thus changing the value of the deal, thus voiding it.
Well, and we were speaking with the professor from the University of Pennsylvania Law School earlier who said, not surprising that the judge granted this request for a Tuesday hearing. What's going to happen on Tuesday will be more surprising. He suggested this trial could be wrapped up by the fall.
Exactly. And the thing is that, it's hard to judge judge, pardon the pun, how this will go, because there's very little past precedent in holding an offer maker, an acquirer to account, but also there's not a lot of past precedent around the material adverse effect. What's fascinating, of course, is that Twitter has earnings next Friday before market, while this is all going on, and earnings is happening. So, hard pivot. Let's talk about what's happening in the world.
Not too hard.
Because there's just so much, right, to take on board that Twitter reports Friday, as I said. We start Monday, or Tuesday rather, with Netflix, Tesla, Snap. What many of them have in common is that they've actually revised guidance for the year, right? Tesla had a very difficult quarter where the Shanghai plant was shut down. You see how tired I am this Friday? We'll bring up the next board vista director and look at the following week, because we're bracing not just for next week, but the week after that. Look at the number of companies reporting in the space of just a few days, the mega cap that's around them. Very quickly, we make a really interesting point as we look at what the kind of expectation is for this earnings period. The expectation is sales growth, right? Top line growth. Part of that is boosted by inflation. Part of that is that the consumer is kind of held up strongly. And that's kind of where we're looking. Sales growth is looking pretty good, other than for the Alphabet parent company of Google. But if you look at the earnings estimates, the profit that's expected, those earnings expectations have come down. Why? You have inflation. You have things eating into margins, higher input costs, labor costs. So this is it now. We're super focused on what the world looks like. And hopefully, in the next 2 weeks, some companies and some of their CEOs are going to give us a good explanation of what it is.
And look at those beautiful graphics, Ed. Thank you very much. Appreciate you walking through all of that for us. I want to get a little more in depth now on the earnings and what we can expect with Ben Beharan, principal analyst and CEO at Creative Strategies. Ben, gosh, what are you expecting? Where are you expecting to see the most pain? Let's start there.
Yeah, so I am a bit more cautious on consumer-centric companies. I think there's a lot of worry that consumers or companies who are a bit more adverse and more consumer-focused are going to bear a bit more of the pain here. I'm not quite sure how much we're going to see in this particular quarter's earnings of absolute pain. I think as we see where they might be guiding and seeing some cutbacks, I think some of the companies like Snapchat, Facebook, Twitter, et cetera, that have advertising focused businesses and really companies that are trying to go to consumers through those channels. If we see them start to cut back, that again, I think will be very telling about how much pain we might expect. But yeah, I think those that are over indexed or most subject to a weakening consumer market are the ones that I'm a bit more worried about. I think on the enterprise side and the infrastructure side, we're not seeing that businesses cut back to the same degree or spending go down in infrastructure. But that consumer segment, I think, is really where there's both questions. And if we do see a little bit more of a recession, I think it's going to be more on the consumer facing side than the industry at large.
Well, let's start on social media since you went there. You've been tweeting about the value of the interest graph, which is something that TikTok seems to do very well, versus the social graph. At the same time, you've got all of this background noise happening with Twitter. And I wonder if that's, continues to be a story contained in itself, or if that story can be contagious or contaminate some of the other social media stories we're following.
Yeah, I mean, the thing that's interesting about the engagement side, so consumer engagement with social media is going to continue to go up and remain strong, right? Whether or not brands feel like consumer appetite is there for some of their products, if consumers have to cut back on disposable income, I'm not sure it really hits things like maybe PCs or smartphones, although I think that gets hit, but not as much as things that are more luxury type products or things that they can cut out of their life if they need that disposable income back, again, because of inflation, or perhaps because we have issues with the job market that I think we're still is uncertain around. So I think the engagement stays, but again, that's a metric in terms of consumer engaging with these media platforms. If ad spends cut back, that affects their revenue. So the consumers will still be there. How they dispose of that income to spend on things that they either really need or want coming into this holiday season, which is really where you'll see these advertisers use those channels, is going to be the big question. So I think, as Ed pointed out in the segment prior, where they guide, what they start to think about the next few quarters from these CEOs, I think will be very, very telling, because I don't think we'll see the full pain right now, but I think we're eking toward a bit more pain in the consumer side. And that's at least where I think more of the thesis needs to get built out.
I want to ask you about chips. I recently had the CEO of IBM on, Arvind Krishna. He said he was feeling optimistic about the economy and corporate spending, but what he feels pessimistic about is supply and chip semi issues. Take a quick listen to what he had to say.
I actually may be a bit more pessimistic on that than optimistic.
Okay.
I think supply chain resilience is a real fundamental issue that's going to go on for a couple more years.
We're going to see a raft of semi results. What are you expecting there?
Yeah, this is something we could talk a long time. This is a deep web of complex problems. But I think absolutely. And even if you look at some of the commentary that's come out of TSMC over the last few days, noting that they feel a lot of their customers have a glut of inventory is going to cause them to cut back a little bit on manufacturing and even in some of their investments going forward, because most of their customers are sitting on inventory that they need to go and make products. So the hard part with that is it's going to look like manufacturing companies like TSMC and even the likes of Intel and Qualcomm and AMD might have less than stellar quarters, but that's not really indicative of demand. It's more indicative of their customers cutting back orders because they're sitting on so much inventory. So it's kind of, is this really an issue, or how much is this disguised on the fact that they over-ordered because of the supply chain issues, knowing that they were going to have a hard time getting chips. And so by sitting on all that inventory, we're going to need that to ease into the market before orders can get placed up again. So there's a balancing act that I think most of particularly the semiconductor companies, are going to have to navigate while they either try to fill orders and help their customers then get through the inventory that they're sitting on, so that their orders can come back again, hoping that demand stays high for their products across the board.
All right, well, thanks for digging into that very deep and complex web. Ben Baharin, Principal Analyst and CEO at Creative Strategies. Always good to have you. Coming up, the crypto meltdown sparking more calls for regulation, in particular, bankruptcy regulation. All that and more coming up next. This is Bloomberg. Time now for our crypto report. Bitcoin up over the last few sessions, but all eyes on the bankruptcy of major crypto lender Celsius, sparking calls for more regulation, especially bankruptcy legislation, as the crypto market continues to tumble more broadly. Our crypto contributor, Sonali Basak, here with more. Sonali, what's the latest that we know?
Here, this is a problem here, Emily. At the end of the day, the question is, how are consumers protected, not only in the event of a bankruptcy, but in the event of larger market stress? You've seen several instances now in which customer withdrawals were paused, and now you're seeing in the bankruptcy filing here for Celsius, is there a clear roadmap here on what happens to customer holdings as certain creditors want to get paid back? You're seeing this issue come up even as Celsius has started to pay back some DeFi counterparties in other ways. But where do the customers fall at the end of the day when you're thinking about who gets owed what, when, and in what order?
Now, this Celsius bankruptcy just has so many knock-on effects, including now that it could potentially impact Bitcoin mining.
Yeah, this was an interesting question, too. I've spoken about it with Sam Bankman-Fried also. Would he buy Bitcoin miners? And part of the answer he had was to the extent that it was, tied to the DeFi activity that we're seeing in the lending. Maybe we'll think about it, but probably not more immediately. So what's happening here? A lot of worries about the Bitcoin mining subsidiary, about Celsius. If Celsius were to sell the business or sell rigs or offload rigs in any way, does that put more downward pressure to prices across the industry? We're going to shift a little bit over now and talk about this more with Anthony Pompliano of the crypto firm Pomp Investments, a venture capitalist for a while now. Pomp, thank you so much for joining us. You've shifted gears to kind of focus on some optimism here at a tough time for the industry, focusing on not just, the trouble in the pricing here, but as prices go down, jobs start to dry up. So you launched a new company here that really focuses on those jobs, and I'm curious as to how many you're actually seeing.
Yeah, thanks for having me. If you think of the job market, one of the biggest problems in the world right now is that the global debt to GDP and also in the U.S. debt to GDP is skyrocketing. And everyone always focuses on the debt side of the equation. Hey, how can we stop taking on more debt? But there is another side of the equation, which is how do we grow GDP faster? And obviously job creation is a key piece to that. And so our idea 18 months ago was basically just how do we get the best people in the world working on the fastest economic sector from a speed and growth standpoint. And that tends to be the Bitcoin and crypto industry. Now, of course, as market prices go down, Bitcoin's drawn down 70% since about November of last year. There are plenty of companies that are doing hiring freezes or layoffs, but there's still tons and tons of companies that are hiring. And so just in the last 18 months, we've helped over 1,000 people get a job in the industry. And we've been doing a lot of kind of corporate training, both for crypto native firms, but also non-crypto native firms as well. And I think what you're seeing is there is some short-term pressure because of price, but over the long term, most people in the industry, both the entrepreneurs and the incumbent companies, they're very long-term bullish and they continue to invest in the space.
But Pomp, 18 months, that included what was still a bull market in crypto, and now we're in a very, very different environment. So to what extent are those jobs really drying up, and are the jobs that are out there changing to enter a new environment?
It's a great question. If you think about that 1,000 people that we've helped get a job, 400 of them or so was last year. So in some way, actually, we've seen it pick up. And what you're seeing is there's still a lot of venture capital that's being invested in the space. There's a lot of companies that now are hitting kind of scaling. They were started over the last 2 years. Now they've kind of found product market fit and they begin to actually hire and kind of step on the gas. And then the other thing that you have to remember as well is that there's just so many companies that are getting started. There's almost a kind of overwhelming of the market. And really, I think one of the most interesting parts of this story is not just the pure aggregate job creation, but also it's a brain drain from Silicon Valley and Wall Street. Almost on a daily basis, myself or someone on our team will talk to very high level folks at large corporations, at large financial organizations, and they say, look, now's the time. They've been thinking about it for a while. They're ready to make the jump and they want help navigating, finding a job somewhere in the Bitcoin and crypto industry. And so I don't think that necessarily job creation is slowing down. I think it's just kind of shifting between different types of companies. NFTs were really, really hot in Q3 last year. Maybe not so much now. You just saw OpenSea lay off 20% of their staff as an example. And so there are some subsectors where there's transitioning, but still the job growth is pretty incredible and still accelerating.
I'm curious about your own investors. How did you go through the process of raising money for inflection points? Why is Peter Thiel interested in the future here of more jobs in crypto? And is he invested anywhere else that you know of to promote the industry?
Yeah, look, the mission of our company, we started 18 months ago, and it wasn't really ever an idea of, hey, let's go raise money and do any of this. We started a business, and the mission is to just accelerate economic growth globally. And we were profitable almost immediately out of the gate. And for 18 months, we kind of just kept our head down and we worked. And we only really took the money because we wanted the right investors around the table. We didn't need the money. We're still profitable today. But it was an idea of how do we get people who have tons more experience? And so when you look through the entire cap table, what you find is these are investors who are highly sophisticated. They've got tons of experience. They've built large companies before. They've invested in plenty of others that have scaled aggressively. And many of them are very big proponents of the Bitcoin and crypto industry. You mentioned Peter Thiel. He obviously spoke at the Bitcoin conference. He's been a Bitcoin investor for a long time. There's folks like former Allergan CEO Brent Saunders. And then there's folks that are, large family offices, Fit Down Capital, or you look at somebody like an XYZ fund, top 10 on the Forbes Midas list for seed investors. Like these are real investors who understand infrastructure is a key piece to investing in a new sector. And while most companies focus on building software infrastructure like exchanges, wallets, data providers, people is a very key piece to it. And we think that we can build out a niche there and really scale.
I know you tend to take the positive view on things, but there's a lot of talk out there about projects that just might not make it through this crypto winter. What types of projects are you most concerned about? Are there tokens that are worth shying away from?
Yeah, pretty much all of them for the most part. I think that even if you talk to people who are big proponents of the industry, they'd say the same thing. Anytime that you get innovation happening, it requires experimentation first. And so what you're seeing is a ton of experimentation, a lot of bad ideas, a lot of bad execution, but also a lot of bad market timing. If you go back to the late 90s and you look at most of those ideas, they were the right ideas. They just didn't end up actually working in that current iteration. It took about 10 years or so before consumer behaviors changed, before more people had internet that wasn't dial-up, mobile phones were in their hands, their kind of familiarity, their willingness to put their credit card online, all these different things had to change. And so I think some of that is what we're seeing right now. But one thing is very clear. There's over 150 million people around the world that hold Bitcoin. And I think that Bitcoin has crossed over from something that people look at as an experiment or could possibly be valuable. And I think now what you're seeing, especially given the backdrop of the undisciplined monetary and fiscal policy, is that Bitcoin has now broken out. It's separated itself. It is different than most of the experimentation of other things. And there's a lot of folks on Wall Street and in Silicon Valley and then across the world that say Bitcoin is here to stay. And I tend to agree with them.
That's Pomp Investments founder Anthony Pompliano. Thank you so much for your time. Emily, back to you.
Janali, thank you. And the Bloomberg Crypto Summit returns Tuesday, July 19th in New York. The summit gathers some of the biggest names in the industry to talk about the market turmoil, regulatory scrutiny, and so much more. That is all starting 8:45 a.m. Eastern Time. Coming up, can this struggling startup end up taking on Rivian? We'll talk about that and the EV world next. This is Bloomberg. Time now for our Technomics segment, and I want to take a look at the world of mobility. There is one EV maker rising through the ranks, and it's called Canoo. And it just won an order for 4,500 vans from Walmart, sending its shares soaring this week. Could it take on Rivian? Let's talk about all that and more with who else but our Ed Ludlow.
Yeah.
So could it?
That's an amazing chart. 100% gain in 7 days. I mean, this really surprised us.
Because people were writing it off, let's be clear.
Exactly. This is, for context, a startup that has struggled, literally to do anything. It's missed its own goals. It's changed strategy a number of times. It has this kind of futuristic camper van looking kind of EV, but it's never really made any progress. The stock, was obliterated basically since it went public via SPAC in 2020. But getting a big order like this from Walmart, not just on the share reaction, but the company's outlook has completely changed.
And you actually got kind of an inside look at what they have going on when you were in Bentonville, which is, of course,
the
where
home of
Walmart
right.
headquarters
So I was at Up Summit a few weeks ago. Up Summit is a kind of annual conference for mobility nerds and VCs that is co-hosted by the Walton family. And Sam Walton is a board member at Walmart. And I was walking around and I was like, hold on. Isn't that a Canoo over there? And it was a prototype. And at the time, didn't really think much of it. And lo and behold, a few weeks later, they have this agreement. Although there's a lot of caveats to this agreement, I have to say.
What are the caveats?
So Walmart can walk away at any time, 30 days notice for no reason. That's a worry if you're Canoo. And the other thing is that Canoo hasn't demonstrated it can do anything yet. It hasn't really built anything. It doesn't have a clear manufacturing strategy. It has various plans to do stuff, some in Bentonville, some in other states. So, this is a hypothetical right now.
And aren't they boxing Amazon out of buying any of these?
Well, here's what's interesting, right? You think about Walmart and Amazon, these are great logistics giants. Amazon already uses multiple brands for gas-powered or diesel-powered trucks. Walmart has made this bet, 4,500, but Walmart also has agreements with GM and Ford. And no one is making any of these at any volume right now.
Exactly. Isn't that really the biggest challenge? Just to actually how are they going to make 4,500 of these?
Yeah, exactly. So, Rivian is kind of the poster child because they have this order for 100,000 units from Amazon to build these kind of bug-eyed vans. You just showed them on the screen. My sources tell me they've built about 600 of them so far, maybe 1,000, and they're supposed to deliver 10,000 by the end of the year. And, the pace just has been disrupted by supply chain problems, et cetera. But there's competition there, and it's an interesting market because we're super obsessed with the consumer EV. But we forget that in the world of moving things from A to B, all these commercial giants need other stuff. They need vans and trucks and things that you and I won't get behind the wheel of.
Well, it is not a zero-sum game, but of course we'll be watching who wins. Ed Ludlow, thank you, and enjoy the weekend.
You too.
All right, that does it for this edition of Bloomberg Technology. We've got great shows coming up next week. We will be across earnings all week long. Of course, we'll be following that big hearing in court in Delaware, Twitter versus Musk, and Matthew Ball will be joining us on Monday to talk about all things metaverse and more. I'm Emily Chang in San Francisco. Have a wonderful weekend, everyone. This is Bloomberg.